We're good to go.
Good afternoon.
Good afternoon.
I'm Anas Siddiqui, and I'm here to present to the NIC stock recommendation on International Business Machine, or IBM, as probably known. In the information technology market of over $1 trillion, IBM, with annual sales of $90 billion, has had its mark in all three categories that comprises the IT, namely hardware, software, and services. They're the #1 hardware server vendors, they're one of the best software vendors, and they are the largest global services organization. Prior to coming to SMEAL, I was working with an IT company, one of the leading IT companies in India, for the past 3 years. So I have pretty decent knowledge of the industry, the technology, and the market. And with my analysis, I would recommend that IBM is a promising investment for long-term benefits, a clear buy for the NIC. And I say that because IBM's strong earnings suggest profits for the NIC. IBM shares rank high in safety and timeliness, and IBM's expansion plans will likely result in greater returns for the NIC. Well, talking about IBM's earnings and revenues, the system and technology services and software departments have all been doing well in the past few years. This, along with a new restructuring that happened recently and the cost-cutting initiatives, has bonded together to reflect into their growing revenues. To take a look at their revenue charts from the past 6 years, it is very characteristic of IBM to have a constant growth in the annual revenue. But what is important and significant for the NIC is to see this little depression or constant growth around this area. To understand this, the NIC has to understand IBM's strategy. Well, they're now moving to the server-oriented architecture, or the SOA, and for that they have to get rid of some of their hardware business. One of them being the sale of their PC business. IBM sold its PC business to Lenovo in 2005, and this is reflected in a little downside in their revenues in 2005. Post this period and their restructuring in this time, they have gone back to the normal revenue growth, and in 2007 it is now at $37 billion. But again, what is important is analysts say, due to their new restructuring, if you take a look at the next 4 years, again IBM is back on track and is going to, and the annual rate is going to be more than 7%. Taking a look at the earnings per share for the past 6 years, has been pretty much constant growth. Today it is estimated at $7.02. That's after taking Q4 estimates. That is a very good number. But again, what is significant for the NIC is to understand that IBM has set its EPS target at $11 by 2010. That is more than $1 per year. Impressive and possible too, considering the massive share buyback program that IBM has initiated a few months back. Now, what would you say about a company that invests $14.6 billion in just 1 quarter in repurchasing their own shares? Well, clearly the management believes in its strategy and opportunities. IBM is set to grow. Taking a look at the share prices as against the market, well, the past 12 months have been pretty good. It started off at 93.5 and yesterday's closing was 108.6. But again, what is important, Nick, to note is the peak number 119.6, which is 27% increase since it started this year. Well, the trends that we can see post mid-November that brought the share price down to 108 is due to the credit crisis. The whole market was down, especially the technological sector, and it's not attributed to IBM. Revenues, the stock prices have started raining up again. I would say, again, it's significant for NIC to see the 12-month target price set by analysts at $138. Well, using EPS rate of 8, which is already estimated, and a PE, price per earning ratio, of 17, which is towards the lower end of the 5-year haul. With this, we could say that the IBM share is currently undervalued and is going to go really high next year. Going by the revenues, the targeted EPS, and the share price that's going to increase, I would suggest that IBM is a promising investment and NIC should buy. But it's also important for NIC to understand the security of the money, the kind of money that they're going to be putting into IBM. And I would say that IBM shares rank high in safety and timeliness. Take a look at the PE ratio, price per earning ratio, the amount of the money that we put into one share to get relative earnings. Well, the lower the PE ratio, the better, of course. IBM with a PE ratio of 15 not only leads its competitors, but also leads in the market. So we would say that we'd be paying less to get more gains. Another factor that we can see to see the volatility of a share is the beta value, which is of course how a firm's share price moves as the market fluctuates. With a beta value of just 1.1, IBM shares are going to follow the market. So we could say that next year, if there is a mini slump expected, IBM shares wouldn't fall as much as its competitors would. Going for the timeliness, IBM has been paying dividends since 1916, and the growth has always been on the increasing side. Well, we see here the data for the past 10 years. Today it stands at 1.55, and the dividends have been increasing all along. Especially after the restructuring in 2005, there was a dividend increase of 41%. That just shows that IBM wants to share its revenues with its stockholders. Going by the security of this share and the dividends that IBM has been paying, I would suggest that IBM is a promising investment for the NIC. But along the same time, with profits and the security, I'm sure Nick wants to know the expansion plans that IBM has in future, which will affect the shareholders. I would say that IBM's expansion plans will likely result in greater returns for the NIC. Take a look at the WebSphere market share. WebSphere is IBM's server, and the market share, they've just expanded the market share to 37%. And they're on the #1 spot. The closest competitor being at 7%, way behind. IBM believes in its product, and this product is going to get higher revenues for the next 5 to 10 years. I did mention to you that in 2005 they had a restructuring happening in their company. Post that, they have been going on a shopping spree. They've been buying out software companies all along. To the tune, I mean, this year to the tune of $7 billion. They bought their they bought out Cognos for the biggest investment that they've done of $5 billion. Well, their buying strategy is in line with their long-term goals. But if you take a look, Cognos, the buzzword in IBM today is business intelligence. Cognos was the leader in business intelligence. By buying out Cognos, not only does IBM get the revenues, but also the technology comes home. Going by these standards, Cognos is now dependent on a company called Informatica, which is again the leader in data mining and warehousing. Not surprisingly, IBM has already shown interest in buying out Informatica next year. The BRIC countries, Brazil, Russia, India and China, we all know they're the fastest growing economies in the world today. IBM has already placed a strong foothold in these companies, with annual revenues being double-digit annual growth in revenues, with the highest being in India at 38%. Moreover, the expansion plans can be seen that the Russian, Indian and Chinese government have given massive automation projects to IBM now that they have a strong foothold in this. IBM has also ventured into Africa, where only a few countries have just started tapping the untapped market in Africa.
What kind of risks will this bring to IBM, these expansion plans?
Yeah, like I mentioned, they've made SOAs, server-oriented architecture. They have developed lots of centers around the world. So doing this, they're falling into the global delivery model. That could increase the sales time, the sales cycle time. That could be an issue with globalization at this time. Here in the United States, they're getting into many industries, especially the health industry, and the technology of tomorrow, nanotechnology. Well, they already researched into creating miniature semiconductors, which will be used in the medical field, and will be bought by pharmaceutical giants like Pfizer and Merck. IBM is expanding, and they're going to get great revenues not only for themselves but also for the stakeholders. I'd like to reiterate that IBM has strong earnings, its shares are very secure, and IBM is in for phenomenal expansion. And thus I'd say that IBM is a promising investment for long-term benefits, and my recommendation, a clear buy for the NIC. I'd like to take any questions if any.
Thank you.
Thank you.